Hi, Mahavir. Can you hear me?
Yes, yes, I can hear you.
Okay. Uh, do you want to test your screen share once?
Yes, yes, I'll do that. Uh, just one second. Yes. I'll just check. Is this visible?
Yes, Mohammed, we can.
Okay.
Hello, everyone. We'll start in just 5 minutes. While we wait, if you have any queries, you can start putting them in the comments now itself. Essentially, we'll take them after the presentation in first come, first serve basis.
Hi Neil, good evening.
Just a quick reminder, if you have questions or as Mahavir is presenting, we will take them after Mahavir is done presenting in first come, first serve basis. So we'll start in just a few minutes. Okay, some of you have raised hands. So we will allow people to ask questions first in comments, then if you want to unmute, but after the presentation, which won't take very long. It's very short to the point. We want to maximize the time for your questions. So yeah, we'll just start in maybe 2 more minutes.
Neil, the comments are disabled as of now, so please check that.
Okay, let me. Daria, can you have a look at that?
Yeah, sure. I think for question answers, you can share it through the other format.
All right. I think we can start, and later on, if people have questions, then of course we can take them in the order asked. Mavi, over to you.
Yes. Hello, everyone. Just sharing my screen. Quickly introducing myself. Basically, run a company called Beshak.org. We are a company that is into providing expert advisory to customers through a panel of experts that we have brought in on our platform. It's not typically like a call center platform where you talk to people who do not have any experience about claims, about insurance products. These are people with minimum 5 years of experience in insurance and people who have been screened and curated by us. And they go through a particular protocol when they give you advice. If there are any questions around this, obviously I'll take it later, but just quickly wanted to give an introduction. I come from around 20 years of experience in the insurance space, specifically health insurance. and I am the founder of this company called Beshak.org. Okay, so quickly going to the presentation, the topic is basically senior citizen insurance playbook. We're basically going to talk about why and how and where do you basically get senior citizen insurance, and what are the problems that people face and why do they face, and generally taking you through the entire playbook of how to basically get yourself covered to senior citizen, or you already have a policy, you want to upgrade, how do you go about doing that is what we will cover in the next 26 to 30 minutes. So first, obviously, let's set the context. Why is parents insurance or senior citizen insurance complicated? Largely, I'm assuming a lot of people would know this, but still it's good to set context, is that insurance is typically, any insurance company is buying risk in the market, right? Like how a bank would basically give out a loan, and depending upon the risk of the person that they are giving the loan to, whether the money will come back or not, and depending upon credit scores, depending upon the person's profile, they will decide what kind of loan to give, what kind of rate of interest to give. Similarly, and the insurance company also would look at the profile of a customer. They will look at what kind of risks are involved in basically covering that person, and they would look at basically how big is that risk and how frequent is that risk before they decide to give you a policy. In case of a loan, you are basically, if you could draw a parallel to a loan, you are basically taking money from the bank and then basically deciding to return it back, and then basically promising to return it back to a bank back, let's say on a particular period of installments, or let's say in various ways. In the insurance sector, it is reverse, like meaning what insurance companies are doing is they are giving you a promise that they will pay you at the time when you need the money, and basis that they typically do a certain amount of risk management to understand what kind of customer is coming in and what kind of money would actually be outlaid by them to, let's say, a customer over and a spread of customers, right? So parents insurance or senior citizen insurance is one of the most riskiest business for an insurance company if you look at it at a very broad lens. And because uh, people who have grown older have a larger chance of basically going through a hospitalization than, let's say, someone who's younger, right? And hence it's typically very complicated for an insurance company to go through that entire process of finalizing and giving you a product, pricing it right, ensuring that if they have to charge you an additional premium, they do that right, they do the medical test right. And hence the entire purchase cycle or the entire way this policy is supposed to be bought is also very complicated. There are a lot of players who can make it very simple, in terms of allowing you to buy it very simply, and you may not have to go through a lot of friction. Whenever that happens, then the life is difficult at the time of claims, right? So either you have a entry which is complicated, or you have a claim which is complicated. At one point in time, you have to decide where the complication is, where do you want to keep the complication, and based on that you will take decisions, right? Obviously, the call should be to ensure that the process when you're buying the policy remains complicated, but then claims do not be complicated, right? I'm just going through each and every option that people have with senior citizen health insurance, and then we will come to personal health insurance, so that we are ruling out, or we are understanding how and where personal insurance fits into the entire game of buying insurance for senior citizens. The first option obviously is the insurance option that is freely available, which is the insurance that comes with PMJAY. You have to take a card which is called a Vyaya Vandana card, and if you're above 70 plus, then you're basically offered a free insurance, right? But there are typically a couple of issues that we have seen. My father is 78 years old, and I have seen that whenever you're trying to actually use it, it's not that easy to use it. Largely two problems. One is the problem of quality, in terms of you being able to assure that you will get a good quality treatment, right? Second is the experience quality, which is basically a lot of hospitals are enrolled or empaneled in PMJY, but they're not happy with PMJY because the margins are very low, and hence they keep delaying the treatment. Meaning they will actually put you on a waiting list and then give you a date when the treatment can be done. And third is it is a cashless network. It's a only cashless network, right? So PMJAY does not work on your choice of a hospital at all, right? Meaning a typical insurance policy, you can go to a cashless network and get treated, but you can also go to another hospital which is not blacklisted and get treated there and then pay first and then claim it from the insurance company. In case of this PMJAY option, you do not have the option to basically go to your choice of a hospital, claim and then pay money and then claim it from the government, right? And hence you will the restriction towards a certain set of hospitals is also something that can be very difficult, typically at two times. One is there is a major hospitalization where you want to choose a doctor first and the doctor then chooses a hospital, and that may not be a part of PMJAY. And basically second could be an emergency case, right, where you typically may not be in the position to find a hospital which is covered under that cashless network of PMJAY. So these are the two areas, and that's why we don't consider, if you can afford insurance, and we will come to that, then PMJAY kind of an option for 70 plus should be like a bonus option or like a buffer that is available with you. But I would not typically recommend anybody to just depend on this, at least to the extent that I know today that the quality is a problem, the network is a problem, right? So that's the 2 points that I've mentioned here: restricted only cashless network, and typically I've heard only bad reviews about the experience, right? The other option that is available to a lot of people who probably work in an organization where the corporate is giving insurance is the corporate insurance that is facilitated by the employer where you are working at, right? This is an option that a lot of people opt for, but there are typically certain issues that you should be aware of when you're opting for it. The first thing is that whenever you're choosing corporate insurance as your mainstay insurance, you have to understand that it is a benefit. It is a benefit and it is not a long-term personal finance solution for you. The benefit will be with you till you're there in that organization, and it will basically obviously get disconnected from you as soon as you leave the organization, right? The other part of knowing that it is a benefit is that the benefit can be withdrawn, the benefit can be curtailed, the benefit can be charged tomorrow, right? You do not have a control over the benefit that your employer is giving you, and hence depending on something which is so serious, which is basically parents' healthcare or senior citizen healthcare, on the company's decisions to provide a certain amount of benefit is not long term. It is something that you can basically look at in the short run, or for particular cases that it makes sense for, but otherwise it is not the mainstay option that you should be basically focusing on as a long-term finance solution, right? So two types of policies are available through the corporate kind of a setup, where a corporate basically facilitates insurance. One is basically they give you a full cover. So they give you let's say a 5 lakh cover or a 3 lakh cover for your parents. Interestingly, it will cover pre-existing diseases. It will have probably coverage for 2-year waiting period illnesses also, which typically in a personal insurance will have a waiting period. There will be very low number of waiting periods in the policy, almost no waiting periods. And you will be paying a premium, or in very, very rare cases, your employer would be paying for it, right? If the employer is paying for it, obviously keep it and use it wherever you can. But if you are paying for it, my suggestion is that look at it as a benefit and only pay for it if you're not having a personal insurance or you're not planning to have a personal insurance. The other place where it would make sense for you to have a corporate insurance and not a personal insurance is where basically you're not getting a personal insurance, right? A lot of people who are basically trying to cover their senior citizen parents, or they are themselves senior citizens, do not actually get a policy because of maybe a couple of diseases that they have, right? If this has been checked 5 years ago, things have changed today, and insurance policies are now much easily available today compared to, let's say, 5 years ago. But if you've checked, let's say, in the last 6 months and you've seen that clearly an option is not available through the top players in the industry and you're stuck, then obviously taking a full cover definitely makes sense. The other place where it makes sense is where you are seeing that there is going to be a claim in the next 2 years, and having a personal policy will have a waiting period, and hence it makes sense to have a full cover even if you have to pay for it through an employer, right? In those cases, it makes sense, right? Otherwise, it does not make sense, right? The other thing is buying a super topper. This should be the last option when you're basically buying a policy for your parents through an employer. Buying a super top up through an employer is, in my view, if you are able to find a policy through the market and you have an alternative available through the retail personal market, and still you're buying a super top up from your company, it's a complete waste of money, in my view. See, super top up policies, just quickly to help everybody understand, are policies which cover you above a certain threshold, and they are basically going to be kicking in only when the claim amount is very high, right? In the short run, if you are planning your base cover well, then super top up is not going to kick in, right? It will kick in only in the long run. And hence, because it is something that is linked to long term and not short term, buying it through the corporate does not make sense, because you do not know whether you're going to be in the corporate for long. And the second is that you do not know that the corporate is going to offer this over years also, right? If there are multiple claims that happen, and if the loss ratios are very high for a corporate group insurance policy, the policies do get curtailed, right? I have seen giant companies which are basically having employees to the size of 2 lakh, 3 lakh employees also curtailing their covers year on year because the claims are just going above the premium that they pay to the insurance company. And curtailments happen through basically very substandard covers then available to the employee in terms of there will be limits on room rent, which basically curtails how much you can claim from the policy. There will be limits on surgeries, there will be co-pays, and a lot of things will get included in that, because of which it does not make sense to specifically for super top up policies depend on corporates, right? So that's about corporate insurance. So we've so far covered basically PMJAY, which is government insurance. Second is that we have covered how to go about if you're buying a corporate insurance, in which scenarios you should look at having a corporate insurance for your parents. Buy it through the parents from the insurance company. And the third, which is obviously the option which I think most of us are here to listen to, is if these two options are something which are temporary or do not have the value of basically depending on it like a personal finance solution, then what is the solution? The solution is obviously to have your own personal insurance, right? So when you're looking at personal insurance, there are basically 3 types of people who are looking at buying personal insurance. I've categorized them into the kind of health they are in right now, right? So the first one is basically someone who's above 60 but is fit and healthy. They don't have any major diseases. They do not have any chronic diseases also. Maybe they have some bit of old age related, some nicks and knacks here or there, some issues that they have, but nothing very serious that they have, or some chronic disease. They're not taking any medications. Very rare in today's world, but it does exist, right? Those kind of people typically have all the policies that you and I or younger people, let's say a 20-year-old would get, a 25-year-old would get. That quality of policy is today available to this person who's fit and healthy, is above 60 also. In fact, if a 25-year-old person is having let's say a diabetes, right? Let's say for some reason, and let's say there is a 65-year-old person who does not have any disease, the chances of the 65-year-old not having diseases to get the best policy in the market today is higher than a 25-year-old with diabetes, right? So typically health and fitness is a very large criteria, and the availability of options depending on you being fit and healthy are almost the maximum number of options that are available in the market today. So that basically is ruled out. If you are basically trying to cover someone who's fit and healthy, then you are as good as a 25-year-old looking for a health insurance. Then the second one is that where there are some specific diseases, right? Like diabetes, hypertension, asthma, or let's say cholesterol being high, or let's say thyroid, these kind of diseases, right? These are lifestyle diseases. In these scenarios also, the insurance industry has opened up to giving covers to people who are looking at buying policies for their parents. And very interestingly, except for thyroid, the other diseases that I mentioned, and now almost there are certain companies that are also offering it for a good array of let's say lifestyle diseases. You can get day one cover for these diseases also, right? Obviously the premiums will be higher, and there could be on renewals also the premiums could be definitely much higher compared to, let's say, policies that cover you after, let's say, a waiting period of 2-3 years. But The fact is that today, someone who has chronic lifestyle diseases does have enough and more options to buy health insurance from all mainstream insurance companies, and most of the comprehensive plans are available to them. In fact, like I said, with a waiver for waiting period by paying an extra premium, right? So, from a point of view of these two people, right, which is one is basically fit and healthy, and the other who have chronic lifestyle diseases, you shouldn't have a problem today buying an insurance policy today. There was obviously certain do's and don'ts of how you should go about doing it, which I will cover separately. The third is obviously major diseases. Someone who has gone through a heart attack, someone who has gone through paralysis, coma, stroke, those kind of people. For them, obviously, it's going to be very tricky to find an insurance policy through the retail personal insurance lifetime kind of a policy that we are talking about. But still, depending upon case to case, there are certain options that can open up. For example, if someone has gone through a heart surgery, let's say 5 years ago, 6 years ago, and now is doing well, then options to open up after a period of time. Even if someone has gone through an angioplasty, options to open up after a certain period of time. So it's not that there are no options available for specific major diseases that you're talking about, but it may not immediately be available. Like if there was certain case I was talking to yesterday, someone who's a cancer survivor and had basically survived cancer, but now has a relapse of cancer. And today they are saying that, can I get a health insurance policy? Obviously, in such scenarios, an insurance company is not going to give a policy. It's like the example I gave for loan, that if someone has defaulted and has a very poor credit score and has defaulted and bounced, let's say, 10 checks in the last 1 year, and then can he get a loan from let's say, a top bank in India? Obviously, you won't get a loan, right? Similarly, if your health score is very bad, right? There's no such health score that is publicly available, but in the eyes of the insurer, the health score is not very good. Then getting an insurance policy is definitely going to be difficult, and it's going to be very expensive also, and will come with a lot of terms and conditions also. That's where basically a group plan is something offered by banks, is something that you could look for only in scenarios where you're not getting a personal insurance from any insurance company because of the diseases or the comorbidities that exist in that specific person. You should opt for this, and this has to be opted with a lot of care because of three things. One is that the pricing may look very, very advantageous in the short run, but these plans are very, very unpopular for the kind of services and the claim settlement they offer to the customer, right? Second is banks, they offer products, but they are very bad at servicing these same plans. So whenever there is a claim, they will just direct you to the insurance company. They don't offer you any kind of support. The third is that basically group plans can be withdrawn every year whenever the insurance company feels that they are making too many losses and the bank is not able to basically negotiate well with the insurance company. Insurance company can withdraw these plans. So these are temporary solutions that you should be choosing only in the case where you do not have an option of having a personal plan at all and all doors are closed. That's where you look for group plans from banks, right? Most PSU banks today offer such plans and they're not very expensive, but like I said, the service will be subpar, right? Then we are now going to talk about something called portability. A lot of people here would already have a health insurance, but probably with a very low cover, or may not be happy with the cover or the limitations in the policy. In that case, obviously, you can do something which is called a portability. Portability is basically a method by which an insurance plan can be moved from one company to the other, right? And with credits for all the continuity benefits that you had with the previous company. So let's say you completed 10 years with an insurance company and now you're not happy with that plan. You can move to another insurance company and that 10 years of credit that you had will also move with you to the new insurance company. There are certain obviously ifs and buts in what I said. The new insurance company obviously has a right to underwrite your case and agree or not agree to basically port you, right? So for example, if I am someone who's having a policy for 30 years, and let's say I am today 60-year-old and I'm trying to move from insurance company A to B, the insurance company B will actually look at me as a new customer, understand my risks, understand my medical history, understand my profile, and then opt in to give me a policy or not give me a policy with conditions or without conditions. So portability is not like a smooth mobile SIM card portability where you just switch like that. It comes with a lot of processes, conditions, and insurance companies have the right to decline portability also. But in cases where portability is available, there are certain things that you should be very, very careful of. The most important thing is don't port just because you've heard certain bad things about an insurance company. If you have already completed, let's say 15, 20 years with an insurance company, whatever said and done, whatever bad name insurance companies would have, and whatever you would be hearing on social media, one thing I can tell you is that if you've been with an insurance company for 10, 15 years, that history is valued by insurance companies. And if you remain with that same insurance company for for the remaining part of your life, your chances of basically fighting through claims if there is an issue or there is a certain amount of dispute is much higher than you porting into a new insurance company and then having claims in that insurance company. Any new insurance company which is porting, which you're porting to, in the first couple of years, if it is going to see any claims, it is going to basically raise an eye of suspicion, right? Meaning they would be worried that there was some kind of disclosure issues, or they've been not told everything that they were supposed to be told, and hence there will be complexities in early claims if you port from insurer A to B and make claims in insurer B, right? So from that perspective, porting is a very tricky and delicate thing, and hence should be done only when you have to do it and you do not have a choice. As far as possible, try to avoid portability for people who are senior citizens, specifically if they have had claims or they have a serious medical history or a chronic lifestyle issue also, right? Because of the reasons I mentioned, the primary reason is that it looks simple, but for the new insurance company, imagine you are the insurance company and the new insurance company is now getting a risk of someone who's 61-year-old, giving them credits for all the waiting periods for for the money that was not received by them, right? And insurance company A received all the money, gave continuity benefits. Insurance B is now getting handed over a customer with in waiting period credits, but not getting any credit of the money that was collected by the previous insurance company. So insurance companies are hence very wary of giving insurance to senior citizens, portability insurance to senior citizens, and more wary when there are early claims. And hence, my strong suggestion to all of you here is that don't port unless it is something that has become like you don't have a choice, right? The second is basically that if you do port, right, if you have to port, ensure that you've collected and summarized all the information about existing diseases before buying the original plan, existing diseases at the time of having the original plan, and then any other medical history, any other claims history, and then consolidate all that and give it properly to the new insurance company. India is very weird today in terms of insurance, how it operates, right? All the burden of informing the insurance company about medical history, about informing about how things should, about the underwriting process, the entire burden is kept on the customer, right? And hence, it is something which becomes very tricky because a customer is finally a customer and can forget, they miss something, but the entire burden still unfortunately lies with the customer, and hence you have to be very, very careful. My usual suggestion in such complicated cases is to look for a good expert who knows his job, who's accountable at the time of claims, who will basically help you, handhold you to do this, and don't do it yourself as much as possible, right? Quick important do's and don'ts. This is my last slide. So, and then we could take questions. Important do's and don'ts. For parents, in our view, senior citizens, the minimum sum insured should be 10 lakhs individual cover. This actually helps you have a good visibility of enough coverage that is available for you for the next 10, 20, 30 years, right? So very important that you do not take lower coverage because the premium is low. Ensure you pay a little more, stretch your budgets, but take a cover of at least 10 lakhs, right? Don't, if you are a son or a daughter and you're buying insurance for your parents, don't add them in your family floater ever, right? There are multiple reasons for that. One is that if you're adding them into your family floater, the premiums will rise a lot for you also overall. And the second is that their risk is higher, your risk is lower. And if you have one floater and all of them in one policy, they may end up using the entire cover in a particular year, unfortunately, if something happens, and you may not have a cover at all, right? And those kind of situations should be avoided. And hence, we typically request and recommend that people have separate policies for their parents, and even possible have individual covers for each of the parent, instead of having them in your family floater, right? Third, I cannot stress this enough, but if you're buying a policy for your senior citizen parents, or you're yourself a senior citizen and buying a policy, please do thorough homework and diligence to ensure that you have informed everything that is known to you about your medical history, including lifestyle issues, including things that you're not taking medicines for but are complaints that you have for health, right? Don't give insurance companies a chance to reject your claims basis you not having declared something. Over declare but don't under declare is what I would say. It's better that you know that an insurance company has a problem with this and does not give you a policy, than to get a policy and then have this issue coming up at the time of claims. So ensure you do a very, very good job at declarations. It's as much important, declarations are as much important as much time you're going to spend to basically find the right policy or find the right expert to buy a policy. Declarations, you should take as much time to do it, and just don't click boxes on, let's say, an online form, or just sign and give a proposal form to an agent and let him fill anything. Don't allow agents to fill proposal forms. Don't be lazy about it. Ensure that you fill it yourself. This is the main reason we see so many claims rejected on social media. We today help so many customers with claims on our platform for free also a lot of times. And we see that the major problem that has occurred has been that at the time of buying the policy, customers did not look at informing the customer well, and they just depended on an agent or a call center guy to fill the declarations, fill the form, and just make a payment hurriedly, right? And that has basically led to major claim rejections, and worse, even policy cancellations, right? Insurance companies can cancel your policy at any point in time, even if you pay premium for 10 years. Unfortunately, they can cancel your policy for basically a fact that you have misrepresented something and you've kept them in dark for something, or you basically call it out as a fraud and just cancel your policy and not repay your money also, right, of all the 10 years that you paid premiums. So it's the worst situation to be in. It's the worst feeling that I have seen so many senior citizens go through, like that, I have been paying premiums for 10 years and now I don't have a policy, and I can't buy a policy now anymore because I haven't had a claim, which is a very serious disease, right? You are in a lurch suddenly. So that's why I'm going to take even more 30 seconds if required, but ensure that you have declarations done very well. And that's why we talk about basically probably even doing a medical test for your parents, or if you are the senior citizen for yourself, to ensure that you at least have done your own homework and diligence to ensure that you inform whatever you could inform to the insurance company. And the last is, I would strongly recommend that, because parents insurance is a very delicate issue, it has complete, like when the policy is bought, at that time also it can get very complicated, and how you fill the proposal form also can get very complicated, and claims, early claims can get very complicated. Having an expert on your side is something that we strongly recommend, versus buying it directly from, let's say, a call center, or buying it through a neighborhood agent who's not known for managing claims, right? Buy from someone who is accountable for claims, who will basically have ownership for claims, who has a track record of helping customers with claims, right? A lot of people feel that buying directly is better because you're cutting out the middleman. In case of health insurance, it is actually reverse, right? At the time of claims, an insurance company is looking at the payment that they make as a loss on their books. They're not looking at it like a mutual fund where they're paying you your money back. Claims is they paying their money to you, and hence they are going to always have restrictions, try to do something or the other to cut down money so that they basically make profits or show profits. Most companies today want to get listed, are already listed, and hence they want to show profits, and hence they will do this And at that time, you should not be someone who's left alone, who does not have someone on your side to basically help you have the same information that that an insurance company has, the same information about your rights, the same information about the policy wordings, so that you're not left alone. So these are things that are our learnings over a period of time, my own learnings that you should follow. That's it. Meaning you can follow us on these basic social media channels. We are available on all these channels. We don't have enough followers on YouTube, but we're doing a reasonably good job there. And we also have a community of experts on our platform whom you can talk to and buy insurance from. I'm not trying to promote anything here. If you find an advisor or an expert in your area who has great experience, who has good track record, and who can offer you insurance and also be there with you at the time of claims, first go for them, right? And if you don't get that, then probably you could maybe make use of us, right? That's it. Handing it over back to Neil, you or Harry, whoever.
Thank you so much, Mahavir. What we will do now is take questions on a first come, first serve basis. So Daria will read out the questions and Mahavir will answer them.
Sure.
Oh, sorry, I was on mute. So first question is from Mohan. The question is, what is the opinion on using Ayushman Bharat Pradhan Mantri Jan Arogya Yojana as base policy and use a super top-up?
Yeah, so basically, when you say that, you should be aware that in emergency cases or cases where there is a major disease, you may still not be able to opt for it if you are choosing a doctor of your choice, and the doctor basically then chooses a hospital, right? But typically, how it works in a major hospital is that you'll try to find the top doctor in that specific field or the stream, and then that doctor will tell you that this kind of a surgery is required, and then you may get admitted in one of the hospitals in that doctor's network, or where the doctor basically goes and treats patients, right? In those kind of situations, you may basically not be able to then opt for that doctor. You will have to go reverse. You will have to first look for hospitals where PMJAY is available, and then look at supply there in terms of which doctor is available, and then choose a doctor. I have not seen this being a good experience for customers, and hence we typically don't recommend it as a cover which is base plus top up. Base is the most important cover that you have, right? Meaning that is what is going to cover you for your immediate claims. For that to look at having a cover or a benefit which is iffy is not something that I would typically recommend. So having a top up over corporate insurance is still okay, right? If you clearly know that you're going to be in a company for, let's say, 15, 20 years, and you always will work with large companies which always offer you insurance, then also it's okay. Or even if you don't have a job at a particular period of time, that money is something that you could maybe manage on your own. In those situations, it makes sense, right? But otherwise not.
Second question is, want to know about health insurance for type 1 diabetes pre-existing.
Right. So, see, now there are a lot of policies that are available for type 1 diabetes insurance also. There are, in fact, diabetes special plans that are available where type 1 people who have type 1 condition can get covered. You could typically just ping us on our platform, and not necessarily you need to buy from us. We will give you the names of the plans, and you could probably decide to buy it from wherever you want to. But offhand, for me to give you plan names would not be right, because these are very dynamic things that keep changing every day. But answer your question, there are definitely enough plans available for you to choose from.
Yeah. So next question is, your views on having an health insurance policy that lapses every year when mutual fund investments on the same premium could grow as corpus over time.
Health insurance premiums lapse every year.
So I'll repeat, your views on having a health insurance policy that lapses every year versus when mutual fund investment on the same premium could grow as corpus over a period of time.
Yeah, so see, this is a very common question where people feel that I'll create my own fund, right? Typically, what you're trying to say, meaning if you zoom out and look at what you're saying, is that you're saying that I'll be my own insurance company, right? Meaning I'll have my own fund. What does an insurance company do? It manages funds and then pays claims to a group of people. You're saying that I'll be that person. I'll manage my own funds and do it. Insurance companies have been struggling doing this on their own, and you saying that you will be able to do it is something that you should reflect on first. Second is that if you have early claims, right, meaning your fund will get created over a period of time, right? Nobody knows how and when you will basically have a disease or need a hospitalization. Specifically, we are talking about senior citizens. In those kind of scenarios, if you have an early claim, let's say in the first 5 years when your corpus is not completely developed, then before your corpus is developed, it will get depleted, right? It will go to zero, right? The other is if there are multiple claims that happen, you are looking at premium lapsing, but what about corpus lapsing, right? In case you have multiple claims over multiple years and your corpus only lapses, then you have no cover. In case of insurance, your premium lapses, but your cover renews every year, right? So if I have a 20 lakh cover today and I'm not used it, right? I may have paid a premium and that premium could have lapsed in your own words. But next year when I pay premium again, my cover again starts, right? In case of a corpus, if I have a 20 lakh corpus and for unfortunate reasons, that corpus gets completely exhausted, then I don't have another renewal that is happening where my cover is going to get completely replenished like it happens in insurance, right? What is an health insurance policy giving you? It's not giving you a 10 lakh cover for 1 year, which lapses. It's giving you a 10 lakh cover multiplied by your remaining lifetime, right? For you to basically put it in an Excel sheet and then look at this as your cover, not 10 lakh as your cover, but 10 lakh multiplied by your remaining lifetime is how you should look at it, and then look at frequent claims and look at early claims and then make a decision. Usually, in my view, I am not someone who's here to basically sell you insurance. So I can tell you, usually it is not going to be a good strategy. What you could otherwise do could be different. What you could do is that create this fund, but keep an insurance. And in the long run, if you end up creating great wealth, right, and you know that this wealth is going to be great in the future, drop your insurance at that time, right? Meaning doing that would be way better than not buying insurance today and then depending on wealth later. The second way to do it is to buy a base plan and a super topper plan as a combination. And then once you have enough wealth, which is at least 4 times of the base plan is what I would suggest, then you could drop the base plan and just have a super topper for the large claims, whereas have a corpus for the small claims. So those are strategies that you could use. But typically just using an SIP kind of a model to basically create a fund today and not have insurance at all would not be a wise strategy in my view.
So next question is from Yugal. Can senior citizens with pre-existing condition access group health insurance policy via banks?
Yes, absolutely. So group insurance is, in fact, the fact of the matter is group insurance policies are very liberal, right? Meaning more liberal than retail policies because they're giving you 1 year cover, right? Next year cover, insurance company is going to decide with the bank and decide what is going to be the premium, what is going to be the benefits, everything. So basis that in plans that are available through banks are slightly more liberal than getting a personal insurance. So answering your question, if there is a disease and you're looking for a group plan only, the chances of you getting it are higher. But the fact of the matter is that they are not worth depending on for long-term personal finance, like as a solution to your long-term personal finance.
So next question is from Balaji. Balaji Muthu, NRI living in Germany. My parents are in India. Initially, we had a 5 lakhs of insurance of simple care policy. Later, I migrated and enhanced the plan to Care Supreme at 10 lakhs. Premium costs are about 75,000 annually, both of the aged above 60. It has recharge benefits. Should I consider super topper?
So if you have a 10 lakhs cover, is it mentioned there that it's a floater or an individual cover?
No, it's not mentioned with regards to floater. It's Care Supreme.
Yeah. So typically 10 lakhs floater with Care Supreme and with the kind of benefits that it has if I'm not wrong, it has many good benefits which will restore your cover. It will also have no claim bonus that will get added. It should not be a problem to basically keep that as your main policy. Explore super top up only after you have checked. Well, let's say if you can upgrade your, let's say, your Care Supreme policy only to from 10 to 20 lakhs. Super top up should be looked as an option only if you want to save that money of basically there is some amount of arbitrage that exists when you buy a base plan plus super top up as a combo versus buying a sum insured of that full amount with one plan, right? So if the delta of the premium is not very significant, then opting for, let's say, upgrading your core plan is going to be better than buying a super top up. But looking at the age that you are currently and or the parent's age and the cover that you have, upgrading to 20 lakhs would be good enough in my view, if it is a floater plan. But if it's an individual plan with 10%, I would still consider this to be a good enough cover at present.
Yeah, so his second question is, I'm also worried about misalignment between insurance company and hospital management, where cashless is being denied. Company keep on removing good hospitals from their tie-up list.
Yeah. So this is a very recent problem that it has been a problem earlier also, but now recently it has become quite big. It is typically something that I would say this is a conflict for good in the future, where right now insurance companies for the first time in their entire history have come together to basically negotiate as a body together with hospitals. And this is actually in the long run a good sign, because it's going to only help customers and insurance companies to get hospitals to basically regulate their rates, right? That is one part of the story. The second part of the story, yes, meaning the problem that you mentioned, that cashless may not be available. See, that could be true for the best of the plans that are available in the country, because insurance companies keep negotiating with hospitals to reduce their rates or give them bulk rates because they want to ensure that the claims are controlled. So it's not necessary that it will happen with Care and not happen to a Bajaj or an HDFC or to anybody else. So this is something that you should be aware of, that by default there could be a chance that you may not get cashless, and hence having emergency funds, having a credit card as a backup, for reimbursement claims, so that you can go for reimbursement claims, is something that I would strongly recommend. Right, depending on cashless for ensuring that you get into a hospital and get admitted is not something that typically I would consider it prudent, at least for the next 5 years, till probably things get improved in terms of technology processes between insurance companies and hospitals.
So next question is, when we leave corporate, can we continue to same policy at personal level?
You can, but it would depend on the insurance company whether they want to opt you from corporate to retail. If there is a claims history or there is a medical history, an insurance company can deny portability from corporate to retail. And hence, it's not something that is worth depending upon. If you are young today, it's better to buy a health insurance as your personal health insurance directly.
So next question is, does it create problems if the base plan and super top up are from different insurance companies? What's your advice?
Yeah, typically having it from the same company is obviously going to be convenient, because when you make a claim, you don't have to submit the documents twice, right? Because the same insurance company has two policies. So the complication obviously is logistics in terms of submitting documents to the insurance company. So always recommend having it from the same insurance company as far as possible. But in certain situations, certain insurance companies are not offering you, let's say, a super top up. It's fine. You should be prepared to make a reimbursement claim, at least for the second claim, right? Meaning, let's say if the claim is for 50 lakhs for some reason, and you have a 10 lakhs plus 40 lakhs policy, your 40 lakhs may be going for reimbursement as a claim, right? It's something that you should be prepared for if there is no option available in your base plan to, let's say, get a super top up.
Sorry, Mahavir, just an add-on question from me.
Sure.
Does it hedge your bets actually to go with two insurers? Is that a smarter thing?
No, it is the information that is available through multiple mediums now with insurance companies has come to a level where they have collective information. So there are certain bureaus that are now activated by insurance companies together, where they are able to tap into the same data, and hence even if that advantage is available, it's a very short-lived advantage. Maybe in a year or two, whatever amount of inefficiencies exists in that is also going to go away. So hedging is not that it specifically is not going to help a lot, and not help in the long run for sure that way. Better way to do it is basically to find a good insurer that you think you feel has a good governance, who basically over a period of time has had a good track record, and then fill the proposal form right, have an expert on your side, and then you are true, meaning you don't need multiple policies that way.
So next question is, in cases where the insured's permanent and current addresses differ, which one should be shared with the insurance company? Do we need to update the insurer each time the base location changes? What happens if the insurer regularly visits their hometown?
Regularly visits the
Hometown.
Okay. So see, insurers don't visit hometowns, or they don't go to, meaning they don't typically would go to your place, meaning have a policy.
Sorry. The question is, what happens if the insured regularly visits the hometown, not the insurer?
Right. So typically there would be a correspondence address and there would be a permanent address. You should update whichever address is being asked from you. If they are asking you for the correspondence address, you should inform your current address. And if you have a separate address, which is your native or your permanent address, you should inform that address. Address is important. Let's say specifically for insurance companies to know, they in terms of data that they use to find what kind of risk they are basically going to insure. They do look at your location as one of the parameters. So informing the right address is going to be important. If they have asked for correspondence address, then inform that. If they have asked for permanent address, then ensure that you inform that address. If there is only one address, then inform your current residential address. Right? So that is the answer.
Yeah. So a continuing question from Balaji. As an NRI, I live in Germany. I come to India for 6 weeks holiday with my wife and a child. I am continuing my health insurance Care Supreme policy of 5 lakhs, where I am paying 14,000 premium. Is this normal or overcautious? Also, should I take a super top up as well?
Right. So there are two parts to this thing. One is that you said that you keep coming to India. So from that perspective, having a policy of your own in India, and if you're an NRI, then 14K is anyways, I don't think in a larger scheme of things is very high for you. From that perspective, keeping the policy definitely is not overcautious. I have so many friends who live in the US and actually come to India for treatment, meaning they find it more, it's very surprising, and I also quite surprised to see this, but to hear this, but typically they are finding treatment in India to be more comfortable, right? So a lot of times that also plays a role in your decision making. The other is that, let's say in the future, if you're planning to retire and come back to India at any point in time, then having a policy today and all your waiting periods getting completed is definitely going to be important, and that you don't have to buy a policy when you come to India. And if that is the answer to your question, that yes, you are going to come back to India, let's say after a particular number of years, then having an adequate cover for you here while you stay abroad is something that I would recommend. So yes, having a super top up, if you're planning to come back to India, or you're going to sizable part of your life you're going to live in India, then having a super top up also makes sense. Then having adequate cover makes sense.
So next question is from Bharat. Hi, which is beneficial to pay premium on yearly basis or pay 3 years premium in one go? I paid for 3-year premium, and now after GST cuts, I think I should have opt for yearly premiums.
Right. So see, typically paying 3-year premium is going to be better. The reason is that A, you get a discount, and B, if there is any kind of insurance premium hikes that happen, then you would basically not have to pay for those hikes. Right? This is a one-off situation where insurance companies had to change their premium because GST completely went to zero through the exceptions that have happened. And hence, this is a one-off situation, right? But typically, if you can afford, you should go for 3 years, 5 years, whatever is available, because you get a discount. And second is that you are also saving money on the inflation that happens over a period of time with insurance premiums.
So next question is, do companies provide insurance if we have kidney related issues for both health insurance and term insurance?
Yeah. So kidney related issues, it would depend upon what is the kidney related issue. If it is something which is a major disorder, then it is going to be very, very difficult to get insurance, because then it will come under a major disease. If it is something which is not a major disorder, but it's something which is typically a lifestyle issue, then you may not have an option of all insurance companies, but there could be a couple of insurance companies which could look at your case and give you a policy.
So next is follow-up question. I know it is not possible to predict, but looking at old data approximately, how much premium hike on every yearly renewal we can expect?
Yeah. So honestly, it should be ideally close to the inflation rate, right? Meaning that is one. And second is basically depending upon your age, the premium could rise. So my typical suggestion has been that after you've crossed 60, the premium should be in the range of around 15 to 25% of the coverage that you have, effective coverage that you have. If it is more than that, then it becomes a very big question mark whether you want to continue that policy or not. Because what that means typically is, let's say if you're talking about 25% of the premium, is that meaning it's a very, very simple back of the envelope math that I'm talking about here, is that if you're going to make a claim in 4 years, once in 4 years, and you're going to exhaust your sum insured, only then it will make sense to have a policy which is charging you 25% premium of the sum insured, right? And that kind of scenarios, typically, if you're taking care of your health well, would not arise. So that's how typically I look at it. My parents pay premiums, which is they're 75 plus today, and I pay premiums which is close to around 30% of the sum insured. But I'm okay with that because I know that for me, if there is a claim that happens even once in 2 years, I am going to break even on the payment that I'm making, and I cannot get such a policy again if I drop from this.
So next question is from Mohan Govindraj. I have a policy with 10 lakh deductible. I plan to port to a new company, but they have only 5 lakh deductible policy. The new
Sorry,
company
Mahavir,
cannot port.
quickly interrupt.
Yeah,
I think a lot of people will be curious as to which policy you have for your parents.
yeah, my parents bought this policy. So they bought the policy in when I was a kid, yeah, meaning I would be in my college, junior college. So basically, it is from New India Insurance, basically. So they bought the policy and continuing it. Yeah. But I don't mind saying it that we are very happy with the policy. We've never had an issue with the claims.
So I'll repeat the last question, which is from Mohan. I have a policy with 10 lakh deductible. I plan to port to a new company, but they have only 5 lakh deductible policy. The new company says cannot port.
Okay. Cannot port. So yeah, then you find another insurance company, right? Meaning there are 50 insurance companies giving health insurance today. Not 50, sorry, maybe lesser. Around 25 insurance companies at least that give insurance today, right? So find another insurance company.
So next is, what happens to an existing floater policy if one member wishes to port out or exits? Can the insurer refuse converting the floater into an individual policy for the remaining member?
Not really. Meaning, typically, most good insurance companies, when I say good insurance companies, then the question will come, how do you define a good insurance company? But as a standard insurance company would not have such issues where they will block you and say that, no, you have to cover both the people. If you're porting out one member and you're continuing with one member, they cannot stop you. Even if they stop you, there is a grievance method by which you can basically, complain and get this resolved. So there could be a resistance from certain insurance companies, but usually it should not be a problem.
So next question is a very typical question. I am 23 male, fit and healthy category, no pre-existing disease. Have a corporate insurance of 5 lakh paid by corporate. Should I take private policy for me?
The whole presentation was about buying personal insurance, meaning you're 23. So I would suggest that if you're very fit and healthy, you could wait a couple of years, and then maybe at 25, 26, when you have reasonable disposable income, then start small with a 5 lakh policy. And then gradually, before you hit 28, 29, 30, you could probably then upgrade your policy to a serious cover, which is for your old age. Right? So that is typically what I would recommend.
So next question is, how seriously 5 years rule is being followed by insurers? Can we assume after 5 years of policy, the claim cannot be denied?
No, the insurers are not following it at all. They will find any reason if you made a declaration, if you've not made a declaration. The 5 years moratorium period has an exception in case of health insurance, which is except when an insurer is able to prove fraud, right? So what most insurance companies are doing is that they are typically just calling it out as a fraud that you did not mention this or that, and then basically not paying the claim and also canceling the policy. Only if it is a very trivial issue, right? Meaning if you're talking about falling from a tree at age 5 in your village because you had gone to visit your grandparents, in that kind of scenario, an insurance company is not going to be able to do it. But let's say someone had gone through a kidney stone operation at the age of 20 for some reason, and that is not informed, an insurance company can take a chance to call it out as a fraud. So it's very, very important. That's why that you make the declarations, like take time out on a weekend, write down everything, make declarations right.
So next question is from Robin. Can insurance company cover someone having mental illness for 25 years plus?
Yes. So let's say 4-5 years ago, mental illness was insurers were very wary about it. But today, insurance companies have opened up to giving policies for people who have lifestyle related mental illnesses. But if it is a clinical issue, then insurance companies definitely don't offer policies today to people who have issue which is where medication is going on, or where there is it is clinical, right? If it is at a therapy level, I'm not a doctor, so forgive my words if I'm using wrong words. But what I'm trying to say is that if it is not clinical, which is where medication is not started, then it is much easier. If there is medication that has started, it becomes difficult. And if it is depending upon how serious it is, an insurance company may decline your case that way.
Sorry, Mahavir, quick follow-up. Isn't there an IRDA mandate that they have to cover people with mental illness?
Yeah, meaning what the mandate says is that they need to look at, so it's basically comes from the Mental Healthcare Act. And what it says is that you have to treat a person with physical ailment and a mental ailment in a similar manner, right? So insurance companies have found their own ways to say that, I don't cover a person with diabetes with, let's say, a specific HbA1c rate, right? So similarly for mental illnesses, I have my underwriting criteria, and basis this, I don't cover people above this, right? In fact, in IDA has also mentioned that you're supposed to put your clear underwriting guidelines about how you want to treat mental illness condition patients on the website, right, of your insurance company. But if you read them, they are so vague and so broad that they make no sense. The idea of IDA was to help create a guideline so that a customer could read it and decide that, okay, fine, this insurance company wants to cover me, not cover me. But the way it is written is so vague that it does not say anything. So insurers are working around these kind of regulations in short.
So next question is from Nitin. There are policies like Niva Bupa 3.0 that are giving unlimited cover. So does the 10 lakh individual cover is still needed?
Yeah, so I am taking these unlimited covers honestly with a pinch of salt. See, insurers today are offering unlimited covers because they are calculating basis what you're going to claim today, right? Insurers, as per regulations, can change their premiums as and when they want, right? Meaning earlier there was a regulation where insurers required a IRDA approval to change premiums. Now they don't require that, and we've seen what has happened after that and how insurance companies have hiked premiums after that. Now imagine a scenario where a 10 lakh regular policy, they have 10 lakh regular policy has seen premiums hike by 25-30%, and from COVID to now, let's say by 40%. Let's say I'm just giving an example. In a 10 lakh policy, if an insurance company is increasing their premiums of 40%, imagine what will happen if you have an unlimited, an unlimited sum insured policy. So, in my view, it's fine that there is an unlimited cover option that insurance companies are offering. It's take it as a bonus that you're getting, but I would not depend on buying a policy which does not have a sum insured at all, because then it will also mean that the premium can increase to any level, is what I feel. So it's a very complex scenario. I don't have a very clear answer to the question that whether you should go for it or not. What I would do, I would say, is that I would want to have a policy which has a sum insured limit, which basically tells the insurer that this is what I can claim, and basis that I know what my premiums are going to be. Right? Unlimited care is being offered today as a gimmick, clearly as a gimmick, because they know you're not going to. It's like getting unlimited internet. I have unlimited internet, you have unlimited internet. They know you are not going to be able to use beyond a certain amount of GB per minute. There is a certain limit that you can use, right? So that is how it is being offered today, because they need to know the threshold, what is the average claim that they're getting, how much you can utilize the cover and all that. In the long run, let's say we're talking about 30 years from now, 20 years from now, the premiums for these kind of policies could just skyrocket to crazy levels.
Sorry, Mahavir, just a quick follow-up. I thought the whole logic behind locking in, as in buying insurance early in life, is that once you have a contract, the subsequent insurance premium hikes can only be done at group level, right? Like for the entire set of people who are similarly situated to you.
Yes.
But that group is defined as other holders of that particular policy, is it?
Correct.
Okay.
That policy, at the policy level, the insurance company will look at profits and losses. So if that policy is making losses, the insurance company will typically come with some new condition, or will basically give you an option of, continuing with an unlimited policy, but with some conditions, or paying higher premium. All those things are going to happen, right? It's very unfortunate that this is happening. When I say this, it's short-term people. A lot of short-term people are running a long-term industry, and that's why this is happening. Meaning, an industry is very long-term, where we are talking about 30 years, 40 years. But people who are selling these policies are just looking at 1 quarter.
So next question is from Rajveer. What do you have? What's your view on Star Health Insurance because of the ongoing issues? List issues in detail. Should I change my insurance or continue? Second question is, how do I inform my current insurer about the recent hospitalization? Is it necessary? I want all possible information to my insurer.
I couldn't get the second question. Let me answer the first question. See, typically what we keep hearing from the market and from the industry and from so many people that we are talking to on a day-to-day basis, the experience with Star Health definitely seems to have gone down, meaning in terms of how they have been dealing with customers, how they've been dealing with grievances. But for me to give a very binary answer to this question would not be fair. Because I don't know exactly cases, but I personally, whatever I have seen as an anecdotal answer to your question, I would avoid it today. Meaning, I would definitely avoid it. As a personal, I would, or my family members, I would avoid it. But from a company point of view, I represent a company. I would look at data. I would look at what is appearing in their reports, how they are basically performing. Basis that, it does not look that bad. Right? As much as it looks bad from the hearsay that we are basically seeing, and which is not important, it is also important, and hence personal decision, no. At a company level, it would depend upon the rating that we've given or the performance that we've given. There, they don't fare that bad somehow.
So second question was, how do I inform my current insurer about the recent hospitalization? Is it necessary? I want all possible information to my insurer.
Meaning, it's a good practice. I would definitely suggest that you would not have any impact on your coverage if you inform an insurance company on your existing policy. Insurers cannot do that. They are not allowed to do that. That basis your change in your medical history after buying the policy, they can reduce your coverage, or they can increase your premium, like just what Neil also mentioned. So you don't have to worry. As a good practice, it's always good to inform insurance company and maintain a timeline with them that, hey, you know what, now I bought the policy in 2025, 2020, 2024, I have been diagnosed with hypertension. I am not going to claim, but I'm informing you. 2027, my wife has got diagnosed with thyroid. It's absolutely good to inform them because it creates a timeline for you also. If there is any major claim that comes in the future, you basically have the timeline and that communication with them. So it's a good practice, but it's not mandatory. A lot of insurance companies in their proposal, in their renewal forms, may ask this question, meaning when you're renewing online, if they're asking this question, obviously you should inform, right? Because they're asking you that question. And there are a lot of insurance companies which in their wordings mention that you're supposed to inform, and hence it's great as a practice that you inform your insurance company as a good practice.
So next question is Interact Money. When the issue of cashless treatment from various hospitals are settled, as they do not allow various insurance company for cashless treatment, please inform me about various forums to fight with the insurance company.
So if I've understood the question right, is that if cashless was
Are
promised,
rejected.
if cashless was promised but not available at the time of claim, then how can I fight it? Is that the question?
Yeah.
So cashless is a dynamic promise, actually, meaning when you're buying the policy, the network is something that is, the network could be A and the network could change to A plus B or A minus B, right? So from that perspective, there is no way you can make a grievance on non-availability of cashless. Cashless is something that, in my view, and the way wordings are also framed, is a way of you getting convenience of not having to pay on your own and not having to manage paperwork. But it is not the insurance, right? The insurance is basically ensuring that the loss that you make gets repaid to you or reimbursed to you, right? That will happen through reimbursement also. So technically, filing a grievance for not getting cashless is not going to hold like a lot of water.
So next question is from Balaji. I am an NRI with age of 37. In future, after 10 years, if I wish to settle in India, is there any way I should do now? At some times in Europe, where appointment time is long and medical system quality is not better than India, is it recommended to have proper health policy now itself or later?
Yeah. So if you plan to come back to India and if you're an NRI, for sure, it makes sense to have a health insurance and adequate cover in India through a good insurance company and probably also an expert on your side. But because of the reasons you yourself mentioned, one is that if you're going to come back at that time to get a policy is not going to be necessarily easy, because if you may have some medical history, the insurance company may deny it. Second, like you mentioned, you could also use it in specific scenarios, like you mentioned, where in Europe you have waiting or let's say some other issues or quality issues or time issues that you want to solve and come back to India and get treated. So yes, strongly recommended that you buy a policy in India.
Next question is, sometimes they ask question about childhood issue for which you may not have any documents. What to do about it?
So you have to mention that you don't have a document, and then let the insurance company decide, right? Meaning it's very reasonable that you don't have a document for when you were 8 years old or 10 years old. It's good to inform and let the insurer know that you don't have documents today, rather than they asking you at the time of claims.
So next is, you mentioned that insurance company can cancel a policy even after 10 years. Isn't there a clause that once a policy has been in force for 7 years or more, claims cannot be denied?
That is 5 years. That is the moratorium clause, but it has an exception for fraud, and insurers are using that condition, which is basically where that exception exists, and basically cancelling policies. So from that perspective, I mentioned that insurers can use that exception to cancel your policy even after 5 years. They will have to prove a fraud, right? For that to happen, they will have to prove that you made a major mistake or you purposely hidden something. If that scenario exists, only then they will be able to cancel your policy. But if it's a very small thing, then then it will turn out to be very unreasonable, and you may have to fight it out, but then it should not happen, right? Meaning after the grievance process, policies have got reinstated. I have had a case personally for my one of my distant family members where the policy was cancelled, and we were able to prove that the customer did not know about it, and it was not fraud, and we were able to reinstate the policy. Right, but the main thing is, your question to you would be that, have you made a major non-disclosure? If you made a major non-disclosure, it is 5 years, 10 years, 20 years, insurance company has the right to cancel your policy.
So next question is from Rohit. My age is
Sorry,
34.
Mahavir, just a quick follow-up.
Sure.
So if there's a non-disclosure, but afterwards the customer realizes that, oh, there's a non-disclosure, but before making a claim, can it be added, and will that lead to termination or not?
Yeah. So if it is a major issue, then the insurance company is typically going to underwrite your case again. And if they were not going to give you a policy, right, at the stage when you first applied, then they will cancel the policy. And I have seen situations where even if the insurance company would have given you a policy at the time, original stage where you were buying the policy, they've cancelled the policy. But in my view, that's a good situation to be in, where you know that the insurance company has a problem with this, and you don't have a policy anymore, and you look for a better policy where your claims are still better assured than this, rather than be in that illusion that I will use moratorium and get my claims approved later, and then have that shock, let's say at age 65, when then you're not going to get a policy. Right? So if there is anybody here who basically has made a non-disclosure by mistake, or now realizes that this is not going to help, it's better to let the insurer know, let them take the call, whether they want to continue or not. And if they don't want to continue, it's better to buy a new policy. It's going to be a situation where you keep paying premiums, and then at the time of claims you'll have an issue, specifically if it's a major problem.
So next question is from Rohit. My age is 34 mil. What should be the ideal cover amount? And is it better to have a family floater for wives and kids, or have individual covers?
Yeah. So for 34, we typically recommend a minimum cover. We don't recommend the optimum cover, because nobody honestly knows how medical advancement will happen over a period of time. We also don't know external factors like pandemics that happen. So nobody can recommend the optimum or the right cover. The minimum cover in our view is in the range of around 20 lakhs that you should have individually. And if you're buying a floater with your wife, then you should buy a 20 plus 20, 40 lakhs floater. So having a 40 lakh floater is better than having 20 lakhs individual policies that way. From a maximum point of view, like I said, that this is the minimum cover. The maximum cover that you should buy is the maximum that you can stretch and afford over a period of time, right? So that's why, whether you should buy a 1 crore cover or not, I would definitely recommend you should buy the highest cover that is available and affordable, obviously, also, because we really don't know how things are going to pan out over the next 50 years. Nobody can predict that.
So next question is, what policy will be good for serious disease like cancer for senior citizens, given it is bought first time? Will it help in the first year if, God forbid, anything such happens?
So the question is that if there is a cancer survivor who is basically looking at buying a policy which covers cancer.
So I think so. He's asking what policy will be good for serious disease like cancer for senior citizens. So
okay,
it's not about they already got cancer. And
buying
will
a
the claim will be there?
Correct. Buying a regular health insurance will cover you for all major diseases also. So having an adequate cover is important, but buying a regular health insurance is what you should do to cover major hospitalizations, major diseases also.
So next question is, I have taken my parents' health insurance 3 years back, form filled by agent. How can I know that what was disclosed that time? If I want to disclose anything, can I do even when events takes place or anything during renewal?
So first thing is, when you got your policy first time, the proposal form is supposed to be attached to the policy. So if you have that record available, then you could look for that. And if you don't have it, you can write to the insurance company and ask for the proposal form. It's something that is your right. You can always ask for the proposal form copy. In fact, as per the rights that an insurance customer has, they can also ask for, if I bought it from a call center, I can also ask for the recording of the call that I had with the, with that call center guy, right? So these are the options that are available. You'll have to write an email to the customer care and ask for it. The second question is that, let's say you come to know that the agent did not inform, then that is something that I already told you, that if it's a major thing, it's very, very important that you inform the insurance company and let the insurance company make a decision.
So the next question is from Avi. We registered a complaint against Star Health on Bima Lokpal for not claiming the open heart surgery. So which points needs to be present on the panel to get claims, and should we port again with another insurance company? It's already ported from Manipal last year without any pre-health condition.
I didn't get the question. That there was a question about Bima Lokmal, Ombudsman.
Yeah.
And there's also a question about portability.
Porting. Yeah.
How are these two connected? Sorry, I didn't get it.
So first he is asking about complaints against Star Health on Bima Lokpal. So which points needs to be presented on the panel to get the claim, and should we port again with the another insurance company?
So let's go one by one. So which
Yeah.
points should be presented would depend upon the case. If you've already submitted your case, the representation is going to be very, very important. What you mentioned there, and how you basically presented your case. If you're going to get a chance, or at the time of hearing, what you should be informing. Typically, as a customer, see, the ombudsman knows the fact. Ombudsman knows the fact that they are talking to customers, because no lawyer or no expert can represent you in an ombudsman. You have to do it yourself. So you will be asked questions which you're supposed to answer. You do not have to, like a typical courtroom, what we see in movies. It's not like that, where you're supposed to present your case or anything. You typically will be asked questions, right? And you give answers and you give facts, and then the ombudsman will take the decision. If it is a valid claim, the ombudsman will approve your claim, will reward you the claim that way.
So next is, if my parents are covered in my corporate, can I take that value as deductible or co-payment so that premiums are less?
You can buy a super top up over the cover that you're getting from your employer. But if you, in my view, that is not a really practical decision or a wise decision to take, because let's say tomorrow, if you separate from the company, or let's say the company changes the coverage or the benefits, then you will not have a cover for that amount. Then you should be ready to pay that money from your pocket. If that is okay, then buying a super top up is fine.
Next question is from Robin. Can we exclude existing mental illness and get cover X mental illness? Any solution you recommend for such case?
No, that is not available as an option, where you can ask the insurer to exclude mental illness and give him a policy. That kind of an option insurers are not offering today.
So this is the last question, which is, in case I want to cancel a policy which was purchased through the banca channel, what is the process? Also, will the GST be refunded on pro rata basis?
I don't think the GST would be refunded on a pro rata basis. You can definitely cancel the policy by just writing to the insurance company that you want to cancel the policy. If it is in the first 30 days of the policy getting issued, then you will get the entire refund of the premium, including GST also.
Okay, so yeah, this is it. This was the last question. No, so we have some more questions now.
I think we can just take three more. Maybe Mahavir has been kind enough to stay for longer than the scheduled time, but I'm sure he has to get to his dinner also. So just three more questions.
Yeah, so there are two questions only now. So from family planning point of view, what things need to be considered? It's an open-ended question.
Family insurance point of view.
Yeah, so from family planning point of view, what things need to be considered?
Meaning, if there is a family, let's say a young family, and who's looking for insurance, they should basically look at what age they are, and if they are fit and fine, they should buy an adequate cover, ensure there are no limits in the policies, and basically ensure that you're buying from a reasonably good insurance company whom you feel there is a good track record.
And the last question is, please suggest top 3 health insurance provider based on the claims settled, or where can we get the data?
Yeah, so basically here is on our website, beshak.org, you can basically go and select something called compare plans, and without login, without giving your phone number, without giving anything, you can see the top rated plans for a standard customer who's 30-year-old, let's say someone who's basically having a, let's say, married and having a child, right? There is another option, which is basically, which is again not chargeable, it is free, is we have something called find best plans. So if you go under health insurance and you click on find best plans, you will have to give answers to certain questions on that form, and basis that you will be recommended top 3 plans that are suitable for your needs, basis all the plans available in the market. So we basically rate close to 150 plans in the market, which are all the top plans from all the insurance companies, and then we match it with your profile and tell you which plan you should buy based on your needs. We also tell you what is the sum insured you should buy. We also tell you basically what kind of riders you could choose and all that. So it's free of cost, and there will be no spam that nobody will call you, nobody's going to spam you. So you could use these find best plans and compare the plans on beshak.org.
Yeah. So we have a last question now again popping up, which is, what is the difference between buying 5 lakh base and 15 lakh super top up versus buying 20 lakhs individual or floater?
Yeah. So I'll answer this question 2 parts. One is obviously you have 2 policies, so you have to make, you always will have 2 policies to manage, 2 renewals to manage. That is one. 5 lakh policy typically today does not have great features. Typically today all the great features are in the 10 lakh policy. So even if you are buying a super top up combo, you should buy it over a 10 lakh instead of buying it over 5 lakh. Right? The only other problem is when you have a single 20 lakh policy, is you are managing one single policy. So it's a more a logistic problem versus having 2 policies and 2 renewals to manage that way. Third could be a 20 lakh policy could have better benefits. It could have, let's say, better medical tests for free available in the year and those kind of things. So you could have better features in that policy. That way.
Yes. So this is it.
All right. I think we've reached the end. Mahavir, thank you so much for patiently answering all of these questions. You can reach out to Mahavir at beshak.org or use the website for any queries on sorting and finding insurance policies. And yeah, always email us at Thefynprint, and happy to forward your questions to Mahavir. Thank you so much.
Thank you.
Thank you, Mahavir, for your time.
Thank you. Bye.